plan in Ireland. We have quite a number of people join us today, so I'm just going to give it about 2 minutes just before I do kind of go into that. I'm going to put up some slides, which I'm going to run through. I try to keep these sessions generally informal, so please don't hesitate to either put some questions into the chat. We are using the chat facility today. I have a few colleagues who are also on the call who can respond to them, or indeed I'm happy to stay after the webinar, or indeed deal with any queries either by email or by a follow-up Zoom. Just to mention, we don't charge for any advice that we give. There's no obligation to take the advice. And I'd like you to all see us as an independent, low-cost broker. One of the plans I'm going to run through with you today is with a company called Zurich, who I'm sure most of you are familiar with. Zurich provide pension plans, insurance cover, but also savings plans. And today I'm going to focus specifically on what I think is the best savings plan in Ireland, which is through Zurich. So as I said, just before I kind of get into the meat of it, just by way of an introduction, hopefully you can see the screens there. We set up Alpha Wealth about 6 years ago, and Alpha Wealth is really, I suppose, a progressive financial services company, primarily based in Cork. We have a small, I suppose, office in Dublin, but we've really become nationwide. It's been one of, I suppose, the few benefits of COVID is that it's enabled us to reach out to more and more people across Ireland because of the fact that we're now working mostly remotely. We provide typically 30-minute complimentary Zoom sessions for individuals in respect of three main areas, which tends to focus on pension planning and retirement advice.
Yeah, and it's going to affect your TWSS if you have any chance of keeping it.
So I should have said, if anyone does find that their mics are not switched off, they should.
Now, maybe you're out of it anyway. I don't know.
You might just mute your mics if that's okay with you. So I'm just going to get started there. As I said, I'm going to try and restrict this to 20 minutes. And as I mentioned earlier, we are running a chat session.
Yeah, but Jim,
sorry, no,
this part of it, there's nothing to discuss in this part. That's what I said to you the last time. The rest of it around what we do with Lianco and what you do with your scheme is a different story.
Yeah, no, I'm 100% clear
Nick,
on the fact that
do you want to just see if Niall can hear you and maybe ask him to mute his
the bad element of that is
yes,
so you've done it. Thanks.
It's got to go.
Thank you.
I'm 100% clear on that.
Sorry, I just managed to mute him there. Okay, so I'll just get started. So guys, and thank you again for your time. So just quickly run through, I mentioned that today specifically, I'm going to spend 20 minutes running through the best savings plan in Ireland. Now, we geared this webinar specifically for people who are saving for their children's education, mortgages, and for grandchildren. But it's really a plan that suits all. I say to people a lot that we've typically found that we haven't been able to spend, I suppose, money that we were used to over the last almost year or so at this stage. It seems mad, but since the pandemic broke, that we haven't been able to go out as much. We haven't been able to, I suppose, go on fun holidays. And I have come across a lot more people who are in a position where they can save. And it's really about putting their money to best use. Now, I'm going to run through some slides. And as I said, we're going to run a chat session if anyone does want to ask any questions, or indeed, I'm happy to stay after the webinar and to run through them. So in terms of where savings rates are in Ireland, and really, I suppose, what is the problem for many of us, if you are in a position where you are trying to save, for example, for your children, the savings rates in the banks are absolutely miserly. I've put up a slide there showing that typically the best rate that you can get at the moment is with An Post, but it's less than 1% a year. And you're looking at typically saving over a 6-year period. There are other accounts, obviously the likes of AIB and so on. But again, once you suffer dirt tax on those, the rates do fall by typically a third. What I would say to you all is that even if you're maybe saving for a house, property, or indeed any other kind of, I suppose, areas, the rates get worse again. You're looking at typically savings rates for adults of 0.85%, which is the best rate currently with Ulster Bank. But again, you need to allow for the fact that dirt rates, which is currently 33%, will come off that figure. If you're looking at lump sums, and what I mean by that is, where you have a sum of monies that are sitting in the bank, or you're looking to contribute into, maybe a house, or indeed for your children, the rates get poorer again, and you can see the rates you're looking at are below typically, a third of 1%. So what is the solution, and what is the area that I'd like you to kind of consider? Well, as I said, Zurich have a really attractive savings plan. Other insurance companies, and again, we're not tied to any particular insurance company, offer plans similar to this, but I feel that Zurich is the best. It provides the greatest flexibility. It allows you to withdraw your money at any stage without penalty. But more importantly is that it has the best opportunity for growth. Okay. So again, I'm going to run through the specifics of the plan, how it works, and why I feel it is relevant for all of you. And I myself, I have 3 children. I've saved for a property, and I would definitely recommend this plan for everyone, that is in a position where they can save. So with regards to children, and I'm going to focus on this piece, and this also includes grandchildren as well, of course, and nieces and nephews. Anyone who is looking to put money aside for, medium to longer term, children's education, saving for their first deposit for a house, for example, the cost of third level education, as most of you probably know, is quite expensive. They suggest it costs roughly between 20 to 30,000 euros a year. In total for someone who is looking to put their child through third level education. And it really depends on whether they live at home or might, obviously move out of home for that. It can work out more expensively than that, particularly if you have a child who, for example, is going to a private school, for example. My own son is going to Christians. And for those of you that may have children who have gone to private school or are currently going, the fees do ratchet up even at a relatively early age. So typically, really what we're saying to people is saving now whilst your children are relatively young for their education over a period of time makes a lot of sense. The Zurich Savings Plan offers you an opportunity to save a minimum of 75 euros a month, where you have complete freedom of payment. You can pay in more than that per month. You can reduce the amount you save. You can put it on pause, and you can put lump sums into it as well. And really, the opportunity that it provides is that it gives you an ability to make a positive return on your savings, which I'm going to go through in a little bit more detail. Now, the key, I suppose, piece of this, and people often ask me, well, Nick, is this guaranteed? Am I guaranteed a return on my savings? And is my investment amount guaranteed? And the answer to that is no. As much as we all want to get a return on our savings, we have to respect the fact that the current level of interest in Ireland is 0%, and there is no free lunch. But what I'm saying to people is that it's about moderating the amount of risk. And I'm talking about small variations of the capital that you invest in order to earn a positive return. So just to look at the backdrop, as I'm sure you're all aware, the current deposit rates in Ireland have fallen fairly drastically over the last 8 or 9 years. We are now in a position where we are seeing negative interest rates enter Ireland. It started to happen in some bank accounts for company monies. We've seen it on some pension accounts, and we are seeing that it's going to be introduced into the personal deposit rate market. One of the German banks, N26, was the first bank to announce this for deposits of over 50,000. But you are going to see it more commonly on the traditional Irish bank accounts. AIB have announced that it's likely that they're going to start charging personal deposits from the middle of next year onwards. So my challenge as a financial advisor is to, I suppose, avoid people paying to have their money in the bank, and more importantly is to try and keep it at least with the level of inflation, so the value of their earnings doesn't diminish. Now, when I talk to savers around risk and reward, what I'd like you to think about is a table that you can hopefully see there. And it's very simple insofar as you can see risk profile 1, which is really deposits, your traditional bank accounts, credit union and post office. The risk level is 0, but the return is currently 0. On the other side of the scale, you're looking at risk level 7, where you can make a lot of money, but you can also lose a lot. And what I say to people is you should never really be in either camp. Yes, we should keep some money in the bank for emergencies and, to cover very short-term payments. But for any monies that you hold that you're looking to, I suppose, leave for at least a year or two, in my opinion, there is an opportunity for you to move up that risk scale and to get a real return on your savings. Now, typically for most savers who are looking at a term of 3 to 5 years and beyond, I suggest that you would look typically at a risk profile of 4, which, as you can see there, is medium risk. So again, for any people that have joined late into this, what I'm really focusing on today is saving for a mortgage, children, grandchildren, whatever the purpose is. As long as you're looking at a horizon of over 12 months, unfortunately, the banks, credit unions, post office will not offer you anything in return for your money. My strong recommendation is to look at options, specifically the savings account with Zurich, because it allows you the opportunity to make a positive return on your savings. Looking at this risk profile 4, which, as I said, is a medium risk level, if you look at the numbers just above the risk profile, varying from 5 to 10%, that's the typical rate of interest that I would ask someone to expect to achieve each year. Now, because deposit rates are at nil, I would, I suppose, center more on the lower end of that scale. So yes, on average, what I'm saying to people is that if you were to save a figure with Zurich every month or as a lump sum, I would like you to expect a return of about 5% per annum in that risk category 4. Now, of course, if somebody's a little bit more conservative, because what we must recognize is that if you are trying to achieve 5% a year, you must also be prepared to risk 5% a year. Now, nobody wants to lose money.
Is that, sorry, Nick, to interrupt you there. This is Brenda here.
Hi,
So
Brenda.
just in terms of that savings plan with Zurich, and you say you put in €75 per month, and if you're taking the risk of whatever 5 to 10%, you're saying that while you could gain, you could just as easily lose, as in if there was a loss of 5%, then your 75 would be reduced by the 5%.
That's correct, Brenda. Yes, that is right. I suppose the one
Okay.
thing I want you to bear in mind, and I know it sounds very kind of black and white, it's not a, like a roulette table.
Yeah.
Zurich will manage that money for you. And I'm going to just go into the reasons why I'm so confident that
Okay.
if you do this over a period of time, the probability of making those 5% and more are going to far outweigh the possibility of negative 5% or possibly more over the course of time. Now, the one example I'll give you is, and I want you to take this away from today, is that if you had started this account a year ago, just before the pandemic, and let's say you disappeared off the planet for a year and you came back today and said, Nick, how is that account doing? Your account would be up about 5% net of fees. And that's phenomenal. So the chart that you can see there that I've put up on the spreadsheet, and I'll go into a little bit more detail with you, but that risk level 4, the medium risk fund that I'd like you to think about as a kind of a default, Zurich will invest that in a fund called Prisma 4. And you can see here over the calendar year of December up to December last year, so fairly up to date, the return over that year was 7.3%, which is phenomenal. It really is. And the reason why I'm promoting Zurich over any other of the insurance companies, and I deal with all of them, is that the average performance for last year, because of the issues that we faced, obviously with the pandemic, was 1.6%. So it's more than 4 times the return. It's really, really significant. Now I can go into the reasons for that, and you might say, well, that was just a one-off. Well, if you look at the 3-year or 5-year performance, you can see that that medium risk fund that I'm asking you to think about a 5% per annum return has averaged 6.7% over 3 years and 7% over 5. So this is not a once off. And if you think about the compounding effect of making those returns year on year, it grows to a very high level. Now, when I set up Alpha Wealth 6 years ago, I've encouraged clients to save because the alternative is poor. We all know that the banks are not going to pay us any interest for the foreseeable future. And it looks like it might be at least 6 or 7 years before interest rates go up to any reasonable level. Now, it's great if you're borrowing money, not so good if you're saving it. And we all find ourselves, well, not all of us, but some of us find ourselves in a situation where, you know, we may not have been that adversely affected by the pandemic, or we might be saving already and we can't spend as much and we're trying to find better homes for it. I've had a lot of people get on to me recently about investing in cryptocurrencies and various other forms, which I have spoken on, by the way. It's not for the mainstay of everyone that's on the call. I really would discourage people from looking at that until such a time that they've put proper provisions in place. Now, if you said, Nick, oh yeah, that sounds fine, but you know, what are they Zurich going to do with our money? Well, this chart here, you can see on asset distribution. Now, I'm sorry it's not massively clear, but hopefully you can see this kind of orangey kind of segment of that pie, which is on the bottom left-hand corner. There are around 57% of the current makeup of that fund are in equities, which is shares. Now, people may have a view as to where they think that will go. I have a lot of people who have spoken to me recently saying that the share market looks expensive. And I would refute that. I would say personally, what we think that's going on in the world with, you know, the pandemic and with the announcement recently of obviously Biden coming into office with Brexit, we have to allow for the fact that, number one, Zurich have taken all of this information on board. But more importantly, the companies that are in this, and Apple is the largest company in this portfolio because it's the largest company in the world, it makes up about 1% of that fund. So that gives you a sense of how diversified it is. And Zurich have taken a very progressive view. They, at the time of the pandemic, they didn't reduce their exposure to these assets. What they did was they just redeployed them in areas that they felt that there was opportunity. So they bought into companies like Amazon and Microsoft and Apple, for that matter, that they felt that there was an opportunity for them to grow, and grow they did. Hence why their performance was so strong. But the key thing is that Zurich will amend that portfolio as they see fit. There's currently about 26% in bonds, which are secure assets, mostly in kind of governments and companies. There's a little bit in property, some alternatives, which are things like oil and gold. But the key thing is that you place your trust with someone, and I'm asking you to place your trust with us, whereby we're recommending Zurich. And what we're doing is we're going to manage that for you. We become the intermediary. You have no direct dealings with them. They are a broker-only company, so you have to deal with somebody. And we provide you with straightforward information about the performance of your account. Now, for those of you that are looking to save monthly, the great thing for you is that the effect of compounding is enormous. And as well as that, if you're saving every month, so if you're saving in January, February, March, and so on, you're buying into this 12 times a year. So the risk level reduces also. Now, this slide that hopefully you can see here shows that if you saved 140 euros a month, which was the old level of the child benefit, which has obviously gone up now by €5, over 5 years, you can see that you would have accumulated a fund of about €9,000. over 12 years, you're looking at about 25,000, and then 18 years, about 42. It's really significant. And obviously, for those of you that are in a position where you are looking to put the child allowance away, you can see there that if you give yourselves time, it will give you a really significant amount to put towards savings. Now, you might say, well, okay, what's the real impact on this? And again, this slide, which I've just shown you here, you can see that over a 5-year period, the effect of these returns versus the returns on cash are much greater. So if you had put 300 euros a month in for 5 years into a cash fund, i.e. the bank, you would have got just shy of about 18,000 euros. Even in a low risk account, which is Prisma 3, you would have made just shy of 20,000. And you can see there in the medium and medium high risk fund, you're going to make more. Now, we as advisors, and David Looney's the other financial advisor, along with one or two others that work closely with us in Alpha Wealth, we provide specific advice as to what's most appropriate for someone. And the key thing is that it can be varied. You can move the funds around, and we advise you as to how that would best work for you, depending on whether you wanted exposure to more secure assets, or indeed something a little bit more specific to you. And Zurich have over 60 funds available. I have a very, I suppose, detailed background in economics. I've worked in industry for a long time. I can give you a very sophisticated breakdown as to what we feel it works best. The one key thing I'd say, and some of you may have already set up accounts like this with Zurich or indeed other companies, is just to make sure that you do not pay too much in fees. I said at the start of this call that we are a low-cost broker, and I'd like to prove that to you in terms of how we provide these funds. We give you 100% of your money invested in the account. I've not come across a broker yet in Ireland that would do the same. And even if you have an existing account, what I'd ask of you to do is just check what fees you're paying, because the fees can really erode the performance. So what we're looking to try and achieve for people is to get the best for themselves with the money that they save. And as I said, you might be a case that you may have a lump sum. You may have a situation where you've already built up some savings, either for your mortgage or indeed for your children, grandchildren, nieces, nephews. I have some clients who are looking to use an account like this to basically trade their car in every few years. And it works extremely well because you can draw down money from it and you can keep the account going. So for example, I'm 47, I have 3 children who I've been saving for the last number of years. Myself, I've been saving for other reasons. And if I need money, I can draw from this account. And obviously I just keep funding it to the level that suits me. And I can, as I said, pause it, increase it, stop it, as and when I see fit. But the key
And
thing
Nick,
to know is that there's
sorry,
no penalties. Sorry,
quick
Brenda, go on.
question. No problem. Quick question there. Just when you say that you can withdraw, do you need to give a month's notice that you're going to withdraw, or can you withdraw at any point in time?
It's 5 to 7 working days notice that Zurich require, Brenda, then
Okay.
they transfer the funds back to your account. So it's fairly accessible on that basis. Now, I wouldn't like somebody to come to me every month to draw money from it. I'd really prefer if they let the money in to try and grow. But of course, there are reasons why people may need to, and that's the key thing. This is not an account that locks you away. So just to briefly summarize, and again, I know I've been pushing this, but what I might do after this call is, we're going to email everyone just the details of the account, including the brochure. I'd ask of you to maybe take a few minutes perhaps to have a look through it. This video is available, which we can forward on to you, as well as the presentation. And David and myself would be more than happy to discuss the nuances of this with you in more detail. We are going to be running more of these sessions. There's another one next Friday on income protection, which is another area that we provide advice in. And as I said, it's really about just making sure that you're properly positioned without being obligated. What we try and do is make this as easy as possible. So if you're wondering what the next step is for you, what we do is we just say to someone, if you are interested in starting the account up, you just advise us of who the name of the person that's going to do the account and the amount that you wish to save. We send you the forms via DocuSign, which is an email whereby you just open the email address, you electronically signature, so there's no need to print or anything like that, and then we can get the account set up for you from a bank account of your choosing. If somebody does have an existing account or indeed wants to talk to us about any other area of financial planning, we're happy to do that, as I said, on a 30-minute complimentary Zoom, just to give you kind of some information as to any other aspect, whether it be if you want advice on a mortgage, whether you want advice on some existing insurances that you have. And we cover a wide variety of these, whether it be health insurance, life insurance, as I said, income protection, which we're going to do a session on next Friday. And for those of you that are interested, please just get back to us and we can put you down on the registration. I'm conscious of time. I did say I'd stick to 20 minutes, so I'm going to leave it at that. As I said, if anyone has asked any questions on the chat, we will come back to you. If you do want to stay on the call and ask me any questions, I'm happy to stay behind. But as I said, we really provide a very easy process for people who appreciate that we're very busy at the moment. It's very challenging at the moment with people having children at home, trying to homeschool, as well as working from home. It's not ideal. And it's really a case of just trying to, this time of year, make sure that you are properly positioned and that you're doing the best that you can, I suppose, with the resources that we have. So I'd like to thank you again for taking the time to come on to the webinar. And you know, as I said, please feel free to ask me any questions. Thank you.
Thanks, Nick. That was great.
Yeah.
Very helpful.
Thank
No
you.
problems.
If you could send the presentation or whatever you have on it, that would be very, very helpful.
No problems at all. I will do that. Absolutely. Thank you.
Thank you. I'm going to jump off now. And thanks again, Nick, and to all the team, David and everyone there. You're great. Really appreciate it.
No problems. Thank you
Thank
very much
you.
for that. Thank you. Take care.
Bye.
Enjoy the rest of
Bye.
the day.
You too. Bye-bye.
Bye-bye. So look, if no one has any questions, what I do is I'll say thank you again. I hope you enjoy the weekend, and we will send you on just some information by email. Again, there's no obligation for anyone to take the advice that we give. And indeed, if you want to just even explore this without feeling in any way committed, please feel free to get on to us. Thank you very much again, all. And as I said, I hope you enjoy the rest of the day. Thank you.